no such income, so 863 does not come into play for him. The regulations go on to say that the taxable income from sources within the United States shall be determined in accordance with Section 861B, and the reader is directed to the related regulations, which are found in Section 1.861-8. Again, if Andy had had income partly from within and partly from without the states, Section 863 could have come into play in determining taxable income from sources within the United States, but this was not the case. Though it's a bit redundant to do so, the regulations then make the point again, stating that taxable income from sources within the United States shall consist of the taxable income described in paragraph A1, which we just saw, plus in some cases income that comes partly from inside and partly from outside of the United States. In Andy's case, 861A and the related regulations determine whether he has gross income from sources within the United States, and 861B and the related regulations determine whether he has taxable income from sources within the United States. As we will see, these sections do not show Andy's income to be taxable. So why are the so-called tax experts telling most Americans that they owe federal income taxes? Like most people, tax professionals grew up hearing that almost everyone owes federal income taxes. Rather than starting with no assumptions and then studying the actual federal statutes and regulations to determine what is taxable, they got their information from publications, teachers, and textbooks, all of which simply echo the conventional wisdom that was passed on from prior generations. When a tax professional does examine the law itself, which does not happen nearly as often as one might expect, he is likely to simply dismiss any evidence which does not conform to his preconceived notions. It boils down to backwards thinking. Most start with the assumption that most income is taxable, and when they see that Section 861 does not show most income to be taxable, they conclude, based on a false premise and backwards logic, that they must be looking in the wrong place. They are simply unable to consider the possibility that the evidence means what it says and that conventional wisdom is incorrect. Section 1.861-8 of the regulations is what we were told to use for determining taxable income from sources within the United States. The first thing those regulations say is that sections 861B and 863A state in general terms how to determine taxable income of a taxpayer from sources within the United States after gross income from sources within the United States has been determined. Then the regulations say that taxable income from sources outside of the United States is determined under Section 862, and in some cases 863 as well. Since Andy only has income from within the states, it is clear that he should use Section 861 and the related regulations to determine his gross income and taxable income. Again, the regulations under Section 1, the section which imposes the tax, told us that the tax is upon taxable income, and that U.S. citizens are taxed on their taxable income from sources within or without the United States. And the regulations under Section 863 specifically say that the taxpayer's taxable income from sources within or without the United States will be determined under the rules of Section 1.861-8 and following. And then they tell us yet again that those are the sections for determining taxable income from sources within the United States. The index of the regulations reinforces the point, referring to the regulations under Section 861 and following regarding income from sources inside or outside U.S. Keep in mind that in spite of all these citations, the so-called tax experts do not use these sections to determine taxable income from sources within the United States. They are either unaware of the citations we are looking at, or misread or ignore them. Now that we have abundant evidence showing that we are in the right place to determine Andy's taxable income, it's time to see what those sections actually show to be taxable. Again, the scenario is that Andy Green, as a U.S. citizen, performed a service within the 50 states and was compensated for it. Section 861 of the statutes states, "The following items of gross income shall be treated as income from sources within the United States." And on the list is compensation for labor or personal services performed in the United States. There are some unusual exceptions in the statute, but none applies to Andy. Even here, the law seems to include Andy's income. We now drop down to 861B for determining taxable income from sources within the United States. There we are told that from the items of gross income in 861A, which includes compensation for services performed in the U.S., certain deductions can be taken, and the remainder, if any, shall be included in full as taxable income from sources within the United States. After coming all this way, it looks like Andy's income is taxable after all. Or at least, it looks that way at the moment. The key to understanding the federal income tax is understanding subchapter N of the Code, which is entitled Tax Based on Income from Sources Within or Without the United States. Section 61 lists some common items of income that can be taxable, but it says nothing about who is receiving the income or where it is coming from. As its title suggests, subchapter N spells out the circumstances under which those items of income are taxable when derived from inside the United States or when derived from outside of the United States. Before we study Part 1 more carefully, we will briefly look at the other parts of subchapter N. Part 2 deals with non-resident aliens and foreign corporations, and the first section thereof, section 871, says that non-resident aliens who do business within the United States shall be taxable under section 1 of the Code, which imposes the income tax on individuals. Here the statutes specifically identify this activity or type of commerce as being taxable. Section 882 says the same thing concerning foreign corporations doing business within the United States. Part 3 deals with income from outside of the United States. It includes sections about foreign tax credits, as well as Section 911, which deals with income earned by United States citizens living and working in foreign countries. It also includes rules about those who reside in or receive income from federal possessions, such as Guam and Puerto Rico. Part 4 gives special rules about domestic international sales corporations, and Part 5 deals with certain international boycott rules. It's plain that Parts 2 through 5 of subchapter N are all about international and foreign commerce. While those parts talk about the domestic income of foreigners and certain foreign income of U.S. citizens, they say nothing about the income of citizens who live and work exclusively within the 50 states. With that in mind, we will now examine Part 1 and the related regulations in more detail. As we already saw, Section 861 by itself, at first glance, appears to show most domestic income to be taxable. For example, the general wording of the statute seems to say that all compensation for services performed within the United States is taxable, with a few unusual exceptions. However, the proper scope of this section can only be understood in the context of the rest of subchapter N. Part 1 and its regulations determine the sources of income for purposes of the income tax. The sections therein give the general rules about determining taxable income from sources within the United States, from sources without the United States, and from sources partly within and partly without. But the regulations say that 861, 862, and 863